Harry Houdini would be rolling over in his grave. What's up, everybody? What's up? Welcome aboard to Bubba's Daily Update. And Harry Houdini, the great magician, would be rolling over his grave in the magic act that just got pulled off by the Federal Reserve, as what we just witnessed was an artificial rate hike that affects only the United States, affects none of the global lend borrowers, is which they were concerned about, because what they did, not only did they raise the rates a quarter, but they slammed the dollar, which is uncharacteristic of the way it should be if rates are going higher. So there you have it, a non-event for anybody but those of us in the United States. The rates basically for them stayed the same, because the dollar got hammered. It continues to be the case. And that's what we continue to watch as our trigger is the strength of the dollar. And of course, that is the last hope that the Fed has to control these markets and manipulate all these markets, is by keeping the dollar low. But like the bonds, like the 10-year, like everything else, it will get away from them and they will screw it up. I have no doubt. In the meantime, the news came out, the market spiked up about over 200, came all the way back down, went back up, and then closed lower on the day. The NASDAQ got clobbered, which made sense based on what's been going on, because we've got some stuff with Facebook. And I think you take a look at this big picture and you say, yes, this is just consistent with a market top and what we expected. I don't think there's anything different than what we've actually expected throughout the entire time here, is that the markets are going to be volatile. And this is what we saw. But I think the biggest key that you should watch is Facebook. Now, if the markets were truly as strong as everybody would like to have you believe, then Facebook wouldn't be down 13% from the recent move. Okay, it would have been able to find a way to rally back. Today it was up about $4 before only closing up $1. Again, those are key signs to watch. We saw gold pop, which, not a surprise, it was on the bottom end of the range, which we said we were concerned about 1,300 as a breakdown. Boom, gold went up $22. Oil was up almost $2. Unbelievable. It's really starting to choke me. I'm going to have to make a decision here soon. But I did fire my last shell into it here, and we'll stay short for a little bit longer to see how it plays out. I think this is total ridiculous. It's in backwardation. If you go out to December oil is $62. All right, so it's $3 discount to where we're trading today in July oil. That's not, or excuse me, in May oil. That is not the right relationship. Bonds were pretty much flat on both sides of them, unchanged. But at the end, you saw some action. And again, look what happened in the grain markets. The grains all rallied right as the announcement came out. Now, those were rallying right into the close. They were all down. Corn, wheat, and soybeans. Soybeans had rolled over. Wheat was well down, about 7-8 cents. And before the close was over, boom, they all finished in positive territory. Now, again, I'm not surprised they finished in positive territory. I thought that they were at levels of support that I'd want to buy anyways. But in the meantime, I know that from the reaction, that was strictly a reaction to the dollar. We'll see where they play from here. I still like the grains. I think they're going higher. And I think as the equity market starts to sell off, there'll be more new money pouring into the grain markets. So I'm not uncomfortable at all being an owner here. Cattle continues to get slaughtered. You know, my biggest fear here is we've got 2 days to cattle on feed report. It's been really ugly, but my concern is that the banks are getting involved here, and they may cause some forced liquidation right before the report. I'm hoping that's not the case, because I believe that there's no way, in my opinion, that this report can be as bearish as they're pricing it in to be right now. In my opinion, now again, I could be wrong, but in my opinion, there's no way that they can be this bearish. So I'm hoping the banks stay out of the way, because again, they're probably getting a little bit nervous with all this pressure. Hogs are able to manage a little bit of a rally today. Not much, considering how much they've been down, but they did manage a rally, so we'll see how that plays out. Bitcoin was relatively unchanged on both sides of it, but the big picture here is very simple. The dollar is the key. I'm telling you, that's the key here. That's what's keeping everything kind of in line, is what's going on with the US dollar. And if the dollar gets out and breaks out over 91, you better duck, because I think we're in trouble anyways. And I do believe that the top is in, as I've said, and I do believe we're going to break to the downside and at least test those February 9th lows. So let's see how it plays out. But again, a great magic act by Chairman Powell. Really pulled off a beauty by getting the dollar to get crushed while the interest rate, they raised a quarter. In the meantime, this is Bubba's Daily Update, and I am Todd Bubba Horwitz. And of course, remember our highschoolinvesting.com program. trying to help the high schools, trying to educate America. And if you'd like to help, go to Patreon, patreon.com/Bubba Trading. And also, don't forget to catch the Bubba Show every day from 4 to 5 Eastern Time at LibertyTalk.fm. Have a great day, everybody. Thank you so much, and I hope you enjoyed the magic. Todd Bubba Horwitz, Bubba's Daily Update. We'll see you later.